Hi everyone, welcome to ACCA's Advanced Taxation video lecture. In this video lecture, we are going to look at the comprehensive example of chapter number 1. As you know, we've already finished our chapter number 1, so now we will look at the comprehensive example from chapter number 1. Now, if you could please move to your notes, as I will do so as well on screen. If you could move to your notes. And on page number 5, there is a comprehensive example. It says example of income tax format, chapter number 1, comprehensive. Rahul had the following income and expenses during the tax year 2018-19. So these are the income and expenses. First of all, let's look at the income. It's got employment income, then it's got bank interest, dividend income, income from discretionary trust. Now, employment income will go into the non-savings, bank interest will go into the savings, dividend to the dividends. Income from discretionary trust will be grossed up 100/55. Income from life tenant trust, it is the interest in possession trust, so it will go to the non-savings as it says in the question as well. 4,000 will gross it up as well, 4,000 times 100/80, because it is interest in possession trust. After that, the child benefit is given. Now, child benefit is given just because the examiner wants to know that whether the child benefit income tax charge will be applicable or not. Remember that the child benefit income tax charge will only be applicable when the adjusted net income is over £50,000. And if it is over £60,000, what? The adjusted net income. So if the adjusted net income is over £60,000, then whole of the amount of child benefit will be child benefit income tax charge, which will be paid to HM Revenue and Customs along with whatever the tax amount is. After that, some expenses are given. Interest paid on loan for partnership, it is qualifying interest, so it will be deducted out of the net income just before the personal allowance. Personal pension contribution, the net amount is given, we'll have to gross it up. We will use this because, one, we will enhance our basic rate and higher rate band with the gross amount of the personal pension contribution. And another thing is that this amount will be used in order to see if the reduced personal allowance will be applicable or the full personal allowance will be given. Okay, so the two reasons for this. After that, the investment is given. So these are some tax reducers. So investment in venture capital trust, enterprise investment scheme, and the seed enterprise investment scheme. As I already told you, we will see in more details as well. Venture capital trust is 30%, EIS is 30%, and SEIS is 50% tax reducer. So we will see that we will deduct it out of the tax payable. Okay, and after that, what we will do at the end, that we will also see that whatever the tax deducted at source is, we'll have to deduct that amount as well in order to reach for the tax payable or the tax receivable amount. Okay, and in the requirement it says, as you know, the calculate the income tax payable by Rahul in the tax year 2018-19. So we have to calculate the tax payable by the Rahul in the tax year 18-19. Without wasting our further time, let's move to our income tax pro forma. So let's start making the income tax pro forma. So the taxpayer's name is Rahul. So Rahul's tax is what we are calculating, and that's our income tax pro forma which we are calculating. So our income tax pro forma, and for the tax year for the tax year 2018-19. That's our tax year is. As you know that our tax year starts in the April month from the 6th and it ends on the 5th of April. Our current tax year for the relevant exam is 2018-19. So that's how we'll start off by making our income tax pro forma. Then we'll make 3 columns. One would be non-savings income. As you already know, in the last video lecture, I've already told you. So it is our non-savings income. Then we got the savings, and finally we got dividends as well. Okay, and final column we can make the total, so where the total amount will be written. All amount is in British pounds, so that's why I want to put the British pound sign here. Okay, now reading on from the question, I have the lecture notes here given to me in the hard form as well. So first of all, the incomes are given. First of all, employment income is given to me, so let's put the employment income first of all. So the employment income. Employment income. And employment income of how much is given? £80,000 employment income, which would go into the non-savings income. Okay, so £80,000 employment income into the non-savings income. After that, the bank interest is given. Normally the bank interest is gross given. Some years ago, examiner used to give it in the net form, and you have to do it manually to gross it up, but now it's given gross. So the bank interest, that is £20,000, and it would go into the savings. Okay, so £80,000 is our employment income, bank interest is £20,000, and all of this amount will go into the total as well. So in the total I will write down £80,000 first, and then the £20,000 our interest income too. Okay, so that's our bank interest. After that, the dividends are given, so let's write down the dividends. Now some of you might be thinking that it's very easy and we can do it ourselves, and just pause the video here and just do it yourself, and once you have done it, then we will see that how you have done it, and you can compare my answers to yours, and if there are any difference, you can investigate the differences. If there isn't, then well and good, that's very great. Okay, right, so dividends is the next amount which is given. So dividend will go into the dividends column, and it is £10,000 given to us in the question. £10,000 dividends are given to us in the question. Okay, after that we are given with income from discretionary trust. We're given the discretionary trust, income from discretionary trust. So let's put the income from discretionary trust now. Income from discretionary trust. And income from discretionary trust, as I already said, that it will be grossed up. So 5,500 is given. Some of the taxes already been deducted out of that, so we have to gross it up. So that's our discretionary trust income times 100 over 55, and it would go into the non-savings column. Income from discretionary trust, if we multiply, it will come to £10,000, and that would go into the total as well. Okay, so that's our income from discretionary trust, and after that income from life tenant trust is also given. So let's move to that. Income from life tenant trust. Income from life tenant trust is also given, and income from life tenant trust is £4,000, and we have to take 20%, we have to gross it up, multiplied by 100 or 80, because 20% tax has already been deducted. And it says in the question as well that it is paid out of the non-savings income, so it will go into the non-savings. So it would go £5,000 into the non-savings column, and £5,000 worth of, and that would go into the total as well. Okay, as I said in our previous lectures as well, that income from discretionary trust is always paid after 45% tax has been deducted, whereas income from the interest in possession trust, which is the life tenant trust, is paid after 20% tax, but it will go into the relevant columns where it says in the question. Like in this question, it said that income is paid out of the savings income, so that's why out of the non-savings income, that's why it went into the non-savings column. Right, so after that, the income from lifetime interest, we don't have any other sources of income. We have child benefit given to us, but the child benefit is only given to us just to test our knowledge about the child benefit income tax charge, as I said earlier as well. Okay, so let's total that then. So here we'll put the total income. So our total income is given to us. How can we reach the total income? We'll have to make the total of all of these. So 80, 90, 95, 95,000 pounds, 20,000 pounds in the savings income, 10,000 pounds into the dividends income, and altogether, if we see 125,000 pounds. 125,000 pounds is total income. Okay, so that's our total income of 125,000 pounds. Right, then after that, expenses are given, first of which is qualifying interest paid on loan for partnership. So we'll have to deduct that out of here. So less qualifying interest, qualifying interest. So qualifying interest will be deducted, and remember the preference, first it will be deducted out of the non-savings, then savings, and finally from dividends. So it could be deducted from non-savings as well if non-savings income is sufficient enough to deduct all of the qualifying interest. In this case, the qualifying interest is only 12,000 pounds, so we know that we can deduct the whole amount out of the non-savings income. And also we'll have to deduct it out of total as well. So total will be deducted as well. Okay, so the remaining amount is the 83,000 pounds. The rest of would be exactly the same, so 20,000 pounds here, 10,000 pounds in this one, and 113,000 pounds. 113,000 pounds. Okay, so that's how our income is. Now let's move to our question again and see what else have we got. Now after that, the VCT, EIS and SEIS given, so these are not any expenses which we can deduct from here. So now we have to make the total of that, whatever the total is. So that is our net income before personal allowance. So that is our net income. Now we have to deduct the personal allowance out of that. So that is our net income before personal allowance, or you can write it down as PA. Please remember, in the exam paper, try to write the full form. I just do it to save our time, but please make sure you write the full form just so that the examiner does not confuse themselves. Although they will be able to know it, but just in case that you don't want to lose some easy marks. Okay, so after that we have to deduct the personal allowance, and we know that there are certain things given to us, like the personal pension contribution, for which we will have to do some working. Okay, so that's why we'll write down the working one here, just to see that the reduced personal allowance is applicable or the full personal allowance will be given. So I'm just drawing a line here so that I can make some working. So I will just start right down here, working one, and working one would be about what? Personal allowance. So the personal allowance. Okay, so that's our working one, and in working one I have to make sure that I have to know what our adjusted net income is. So first of all, we'll see net income. Net income. Total net income is how much? Total net income is 113,000 pounds. That is before personal allowance, less personal pension contribution. personal pension contribution, and that's our gross amount. And it was how much? Personal pension contribution. Net amount was £16,000 multiplied by 100 over 80. Okay, multiplied by what? Okay, so 100 over 80, that's £20,000. So we'll have to deduct the £20,000 out of this one, out of 113, and the remaining amount is £93,000. That is our adjusted net income. Adjusted net income. So our adjusted net income in this case is £93,000, and we know that when adjusted net income is less than, so personal allowance will not be reduced as adjusted net income is below £100,000. Okay, you have to communicate to the examiner at this point, otherwise you will not gain the mark. Okay, so you have to say to the examiner that I know this rule of reducing the personal allowance and how it works. Okay, so by writing down this note, now I have communicated to the examiner that I know this rule and I want to move forward, and the personal allowance will remain exactly that, like the way it is. Now, personal allowance, amount of personal allowance is given to us. That amount of personal allowance will be given to us in the question, in the exam paper as well, but it is given to us in the notes as well. Okay, so what is the amount of personal allowance? So amount of personal allowance for our current tax year is 11,850. So let's deduct the personal allowance out of this one. So less personal allowance, and it is 11,850. Is it? Yes, it is. So 11,850 is our personal allowance, which will be deducted out of total as well. Okay. Right, so after deducting the 11,850 personal allowance, the remaining amount is 71,150. And in total 101,150. Please make sure you redo these mathematical calculations because I might have got it wrong. Okay, so that's our taxable income. Taxable income is this much, 71,150, 20,000 pounds of the savings, and 10,000 pounds of the dividends as well. Okay. Right. So as we know that it is our taxable income. Now we know the tax rates as well. Tax rates are given to us the tax rates will be given to us in the exam paper, and these are given to us on the lecture notes as well. Okay. So we have to now calculate the tax according to these tax rates which are given to us. Now, without wasting our further time, let's calculate our taxes now. Right, another thing as well, because now we have already got adjusted net income. Where is our adjusted net income? Let me highlight it for you. Our adjusted net income is given to us now. As you know, this one is our adjusted net income. Here, this one. Okay, so adjusted net income is already calculated, and it will also help. This figure will also help us determine that how much will be the child benefit income tax charge. Remember that when adjusted net income is over £50,000, then child benefit income tax charge will be applicable. However, only when a couple or when an individual is receiving child benefit. In this case, Rahul is receiving the child benefit. And another case that when adjusted net income is over £60,000, then whole amount of child benefit will be considered as child benefit income tax charge. Now in this case, £93,000 adjusted net income is well over than £60,000. So whole amount of the child benefit will be child benefit income tax charge. We can write down in the note as well if you want, or you can do show it as working or whatever. So I will do it working in this one. Sorry, I forgot to select the pen, so I will have to select the pen first. Right, so working to child benefit charge. So child benefit charge. Here you will have to state everything which I have just told you as adjusted net income as calculated in working one above in the brackets as adjusted net income is greater than £60,000, as adjusted net income is greater than £60,000, whole amount of child benefit will be child benefit income tax charge. Will be child benefit income tax charge. Okay, we know that because it is greater than £60,000, that's why the whole amount will be child benefit income tax charge. Right, so taxable income. So now we have to calculate the tax liability. Tax liability calculation. Right, so tax liability calculation, first of all, we'll have to calculate the tax on the non-savings income. That's our preferences. Non-savings. And on non-savings, we know that there are different bandings given to us. And then bandings will be extended by the gross amount of the personal pension contribution. Okay, now we have to do the working 3 here. Working 3. Extension of bands. Extension of bands. Okay, now this is working 3, extension of bands. Normal band, the basic band, basic rate band, and higher rate band. Higher rate band. Okay. Now the basic rate band, the normal one is what? 34,500, 34,500 plus the gross amount of the personal pension contribution. How much was the gross amount of the personal pension contribution? So the gross amount of the personal pension contribution is £20,000. So plus £20,000. And normal higher rate band is £150,000. We may not have to use this one, but we are extending it anyhow. We'll have to extend it by the gross amount of the personal pension contribution as well, so which will make it £170,000. It would be 54,500, and that one would be £170,000. Okay. Now we have to mention beneath that what we have done. Basic rate band and higher rate band, basic rate band and higher rate band is extended by the gross amount of personal pension, contribution, i.e. £16,000 times 100 over 80, which equals what? £20,000. Okay, so that's how we do it. Right, so that's our note, working 3, and we know that we have to communicate to the examiner that we know this rule of extension of the basic rate and the higher rate band. So that's why we did it. Now we know that our extended basic rate band will be used, and extended basic rate band is now 54,500. 54,500. Yes. Yes, 54,500 at the rate of what? 20%. And the remaining amount out of the non-savings income total was how much? 71. Okay, so 71,150 less 54,500. So whatever the amount is, that would be at the rate of 40%. Okay, so that's our whatever the percentage is, that is our income tax liability, and this one as well. So that's on the non-savings income. Then we will move on to the savings income. And on the savings income, we know that first 500,000 is at the rate of 0% because of the nil rate band. So first 500 is equal to 0 because there is no tax at all. So 500 at the rate of 0% is equal to 0, and the remaining amount, how much was the total of £20,000? So £20,000 less 500 equals 19,500 at the rate of 40%, because now we are in the higher rate band. So that would be our tax on the savings income, right? After that, we've got dividends income. We got dividends as well. So dividends income is £10,000, and we know up to £2,000 we do not have to pay any tax. So £2,000 at the rate of 0% equal to 0, and £10,000 minus £2,000, £8,000 at the rate of what? 32.5%, 32.5%. So that's our tax on the dividends, right? So please make sure you do these calculations. So whatever the percentage, use your calculators and do these calculations. So whatever the amount is coming, so that is our tax on the non-savings income, savings income, and finally on the dividends income as well. Okay, so after doing that, so that would be our total income tax liability. And now what we have to do is, after doing the total of that, just give me 1 second. So after doing total of that, so what that will be our, sorry, and total would come here. Whatever the total of these figures are, please make sure you do that. So whatever the total is, after doing total of that, now we have to reduce this liability by the tax reducers. Okay, so we'll have to do the less tax reducers. Tax reducers investment. So what order shall we use? First VCT, investment in VCT, EIS, and finally SEIS. Okay, and we know that in VCT, how much have we invested? We have invested in VCT £20,000 times 30%, whatever it is. In EIS, we have invested £10,000 given to us in the question as well, at the rate of 30%. And in SEIS, we have invested £6,000, but in this case it's 50% relief, 50% tax reducers, which is £3,000. In this case, £3,000 as well, whereas in this case it's £6,000. So total amount of tax reducers, if we do, excuse me, it is £12,000. So our income tax liability will be reduced by the total of tax reducers of £12,000. Remaining amount will be our income tax liability. Income tax liability. Okay, so that's our income tax liability here. Now, out of the income tax liability, some of the taxes are the ones which we have already paid. Now we have to deduct them as well, because we have already paid, and we have shown the effect of them in our calculation as well, so we can't do that twice. So that's why we have to deduct the tax paid at source. Okay, so tax deducted at source less tax deducted at source. We have to deduct the tax deducted at source. And in our question, there are a couple of them. Income from discretionary trust. So tax paid on income from discretionary trust. Income from discretionary trust. And tax paid on lifetime interest. Okay, now income from discretionary trust, how much have we paid? There was total amount of £10,000. We have grossed it up in the question. 45% tax, as I said earlier as well, while we were doing that, 45% tax has already been deducted, so 4,500. Whereas on that one, 20% tax has been deducted. Amount is £5,000 times 20%. So that is our £1,000. So that's £1,000 will be deducted here as well. So total amount is what? £5,500. £5,500 is tax deducted at source. So that's our total tax deducted at source. Tax deducted at source, 5,500. And if we deduct this amount out of this figure here, whatever you will calculate, the net amount will be either tax payable or the receivable. Okay, so that would be our income tax payable if it is a positive amount, or receivable if it is a negative amount. Okay, so that's our income tax payable or receivable. Please remember, before going to pay this amount to HM Revenue and Customs, we also have to include what? The child benefit income tax charge. A child benefit income tax charge. So child benefit income tax charge. That was working number 3, I think. We've already done it in the working. And so whole amount, whatever we have received in the child benefit, £7,000. So £7,000 will also be paid to HM Revenue and Customs along with the income tax payable. Okay. So that is the total figure payable to HM Revenue and Customs. Payable to HM Revenue and Customs. Okay. Right, so we have already done our comprehensive example, which I was following from my own notes in the hard copy. So this is our example, Rahul, for the tax year 2018-19. So that's our end of our chapter number 1, and we have already done the example as well. Now, if you have done it yourself, just compare your answers with these ones, if you have done any mistakes or not. Hopefully you haven't done any mistakes. If you have, just try to rectify them. We'll move on in the next video in we'll move to the chapter number 2 in our next video. And until then, goodbye. Thank you.